And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning and welcome to the show. Of course, it is Tuesday. John Penn will join me this morning. We're going to be talking a little bit about risk this morning. Really good article out just recently. It was a video actually by Howard Marks talking about risk. And so we did a little bit of a workup on that on the website this morning. But we'll kind of go through it with you this morning and talk about risk, because this is really the key focus of managing money. And if you're managing your own portfolio, if you don't understand risk and what it really means, then you're really setting yourself up for potential failure down the road. Risk is critical, right? It's the same thing as gambling, and we don't really think about it this way. But in investing is just like gambling, right? Because you're betting on uncertain odds, and you're betting on uncertain outcomes, and just like betting at a blackjack table, again, people say, well, I just buy, stock for the dividend, whatever. Things happen, right? Unexpected things happen, unexpected events occur. And so if you don't understand risk, you really set yourself up for failure. But we're going to go into that this morning a little bit with John Penn. Outside of that, though, economic news, pretty much absent at the moment. After the employment report on Friday, lots of Fed speakers over the last couple of days, not really saying much anything exciting, but the reality is right now is that there is no 50 basis point rate cut in November on the table. That has now been removed by the markets. We're now down to 25 basis point cut in November, potentially one in December, unless there is a substantial increase of weakness, or that's kind of an oxymoron. If there's a pickup in the weakness in economic data, that's about the only thing that's going to put a 50 basis point rate cut back onto the market. So right now, markets are beginning to try to adjust for that to some degree. We saw a little bit of that action yesterday, and in this morning's daily market commentary, which is on the website now, we talk a little bit about what's going on with interest rates as well. So we kind of dig into that because, again, something we had talked about several weeks ago is that bonds were too overbought to be purchased, right? And people were talking about, the interest rates were just, falling, they were coming down, and bond prices were going up, and everybody was clamoring to get in. We're like, no, just hold on, because bonds are so overbought here. You're going to get a correction, and it could be some hotter than expected economic data. It could be some other event. Well, the data did come in a little bit hotter than expected, and that's been pulling yields back up. And yesterday we were right at about 4% of the 10-year Treasury. So we're now getting back into that buy zone for bonds. But again, you need to give this a little bit more time to work through because, again, some of this data is still coming in. But speaking of the employment data, now, of course, that was the biggest report last week. And now that we've had a few days to kind of digest that data, to kind of dig into it some more, is that if you worked out the seasonal adjustments, there was a lot of anomalies with the seasonal adjustments in the month of September. In fact, it was one of the largest September seasonal adjustments ever on record. So if you normalize that, the actual employment data was about 145,000 people versus 245,000 people, which would have been much closer to the headline expectations. But speaking of that, it was interesting because if you take a look at those jobs, it was mostly a massive increase in leisure, hospitality, and government workers. I had a friend of mine call me yesterday who owns a lot of restaurants, and he said that employment report is right. From this standpoint, he says we are able to hire right now people that we were not able to hire a couple of years ago. There's a lot of people now available looking for jobs in the restaurant industry, and we're able to hire these people. Now, what's interesting about what he said, though, was he says we're not hiring them full time. He says a lot of these people are looking for additional jobs. They're looking for working 2 or 3 nights a week at the restaurant, that type of thing. So they're looking for additional part-time work to supplement their income to sustain their cost of living. So they're willing to work a bit, but not on a full-time basis, but on a part-time basis. That also jives with a lot of the data that we saw in the employment report on Friday, which showed a sharp increase in multiple part-time job holders. So again, a lot of that kind of on the boots, kind of on the ground type data is confirming what we saw in the employment report on Friday. So, all right, let's talk a little bit about what you need to know before the bell this morning. Markets did sell off a bit yesterday. We were down about 90 bips yesterday in the markets. So again, we talked about this yesterday on the show. Remember, we're talking about technical analysis and this kind of rising wedge pattern, which is just these kind of rising bottoms that we have going on in the markets at the moment. And so we have these kind of rising bottoms, and then we have these tops that we've been putting in. And so we're kind of, as we talked about yesterday, we're compressing this price level in the markets. Well, yesterday we sold off. We're sitting right on the 20-day moving average, which is just it's kind of this first initial level of support within this kind of rising wedge pattern. So the market needs to hold that this morning. Futures are pointing up. The Dow's up about 33 points right now. So markets need to kind of hold on here. But as we talked about yesterday, the markets have just been kind of consolidating really for the last couple of weeks after this kind of run from that August sell-off. So we had this big run in the market from the August sell-off. Now we've just been kind of consolidating, sold off a bit yesterday. Markets are just kind of in this consolidation pattern. But as we noted yesterday in particular, is that we're on this sell signal and we're working off this overbought condition. So again, we kind of have this setup right now where markets just really can't go anywhere at the moment with any kind of oomph. So we may be stuck here for at least another week until we start getting into earnings season next week. And then once we really get into earnings, it's starting with banks on Friday, but really next week we really get into the meat of earnings season. That'll be the next set of drivers for earnings heading into the election in November. But right now, markets just kind of really seem to be stuck at this level. The risk, as we talked about yesterday, is for some reason if this market does start to break down, which again, seasonally and historically in election years, kind of the mid-month, October 15th through the end of the month, tends to be a little bit weaker spat for the markets historically, just right into the election. People just kind of taking some risk off the table before that election. Could still see some weakness here. So again, if we do start to break down and we take out the bottom of this kind of this rising trend line, we're going to look to retest the 100-day moving average and the 50-day moving average, and those are a bit lower, about 3 to 5% lower. So again, this could devolve into a bit more of a correction here before the election. I'm not saying that's absolutely going to happen, but this is why we go back to talking about risk management in particular, because this is one of those moments right now where there seems to be a little bit of rising risk in the markets, particularly with the sell signal in place. But there's one other thing that's really kind of that's worth watching, and we've been paying attention to a good bit here lately, is that volatility is continuing to rise, even with the markets, as the markets have been going up here over the last, kind of 3-4 weeks and even consolidating a fairly high level. Very quietly, volatility has been rising. And normally when you see a pickup in volatility like this, it normally coincides with market corrections of some sort. Now, that doesn't mean 10, 15, 20% corrections, not at all. But 3 to 4 to 5% corrections are very likely when you see volatility rising, even as the market's going up. It's kind of a precursor to a pickup in overall market volatility, and positioning in volatility options has been rising as well. So again, not a sign that says you need to sell everything out of the markets, but it's certainly one of those signs, kind of like a yellow flashing street light, right? Just something you kind of pay attention to. All right, come back from the break. We'll talk a little bit about risk with John Penn. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners. to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. So, John's got a few things to get into this morning as well, so I don't want to spend a lot of time on this article. But I think it's really worth discussing because risk is the most misunderstood part of investing. You know, just as investors, we tend to go out and buy stuff because it's going up, but we don't really quantify or calculate the risk of the actions that we take. And one of the more interesting aspects of risk is the understanding of the impact that risk has on your portfolio. We believe that, or we're told at least by the financial markets and by financial advisors, et cetera, like, oh, don't worry about it. The more risk you take, the more money you make, right? That's not true. Risk is a function of loss, right? We don't, if I said, hey, look, I want you to jump out of an airplane without a parachute, right? That's pretty risky, right? A guy actually, I use that narrative all the time, right? Because like nobody would ever do that. Some guy did it. He actually jumped out of an airplane without a parachute, like 6,000 feet, and fell into a net and survived. So there's always that guy.
That makes me weak in the knees just thinking about that.
But that's the idea, right? You wouldn't take that kind of risk. You understand that if you drive exceedingly fast in your car, like 150 miles an hour, there's a risk that something goes wrong and something happens. And the point is that you're taking a lot of risk, right? Nothing good comes out of that. And it's the same thing in investing. Risk is how much money you lose when something goes wrong. It's not how much money you make. And again, the follow-up article next week on this. So I started with this article, and the next week is the guy that lost $415 million because he was taking on so much risk, right? Didn't understand the dynamics of risk. But one thing so Howard Marks, if you don't know who Howard Marks is, by the way, let's start there. Howard Marks is one of the greatest investors that we have seen in generations. We talk about guys like, Warren Buffett and, all these others that have had just, fantastic careers as investors, Peter Lynch, et cetera. Howard Marks is one of those guys, just a brilliant man who has been incredibly successful in investing for Oaktree Capital Management. Now he's not a stock investor; he's a distressed debt guy, so even more challenging in that space. But he says that risk isn't just volatility. the risk is the probability of losing money. And he says the magic of volatility and the magic of risk is its asymmetry. And it says one of his most important lessons is the concept of asymmetric investing. And that means structuring your investments so that your potential gains are larger than your potential losses. And this is how we manage portfolios at RIA, is that we look at the portfolio and then we structure it to generate gains but minimize losses. And that doesn't mean it always works, right? That's the challenge of investing. But that is the goal. The goal is to structure the portfolio so you can make gains but keep those gains when markets begin to correct. And there's a lot of process to that, but that's your ultimate goal. And the problem, and this was in the interesting concept that Howard says, you can't quantify risk, and that's a true statement, right? You can't. There's not a measure for risk. If I say go buy NVIDIA as an example, and you go, well, there's a lot of risk to that because it's so high now. It's had such a huge run. Well, that's true, right? But you can't quantify that. You can't say, well, when something happens, that stock's going to lose 50% of its value or 70% or 90% of its value. It's done that before, by the way. But you can't quantify it. You can't specifically state that the risk to this investment is X. That's what makes managing risk very challenging. And, some of the things that we look at when we're talking about managing risk and we're talking about looking at our portfolios and going, okay, how do we structure our outcomes so that they're more in our favor? Those are the things that become challenging because there's risk that we don't talk about, right? We focus on the risk of losing money. However, there's other risk you have to be aware of, like missing out on gains by playing it too conservative. And John and I have talked about that numerous times here on the show, is that, there are people that come to us today that have not been in the market since 2009. And they're going, okay, I need to get back in the market. It's like, well, what happened? Right? Well, I was worried that the market was going to crash more, right? And it just kept going up. So I've got to get back in. That's not an uncommon story. After the Depression, there were people that never deposited money in a bank again because they had lost all their money in a bank. So once you go through those tragic experiences, there is an impression that's left. But one of the risks that, he talks about is, missing out on gains because we play it too safe. We're too conservative. We keep expecting something to happen. And, oh, by the way, if you're one of these bunker people, I just noticed yesterday that on Zillow, they just announced a missile silo in Kansas for sale. It's like $700,000. It needs to be reworked. I'm not doing another remodel, so it's off my list. But if you're looking for a silo to build an underground zombie-proof bunker,
It's open to the highest bidder.
No, it's not. $749,000. You can buy it right now.
That's it.
Yeah,
Set price.
set price.
How about that?
It's not an auction. It's but it is a fixer-upper. It's going to cost you probably $2-3 million to fix it up, but there you go. You've got a deal. And one of the other things that he talked about was risk is deceptive, and I think that's probably one of the most important parts of his entire conversation. Is that when the market feels the safest, right? That's actually when it's the most dangerous because we become very complacent in that environment. And again, if you want evidence of complacency, Brent, you can bring this chart up for me. I know you had it set earlier and I took it down. So it's back. When everything is going extremely smoothly and it's a no-lose market, it doesn't matter what you invest in, it just goes up, whether it's gold or stocks or commodities or whatever it is. That's actually a much more dangerous environment than a bear market. Bear markets are actually fairly easy to navigate. Bull markets that are very late in maturity are much more difficult to navigate. And right now you have household equity ownership is at the highest level on record. I mean, literally everybody that's in the market is in the market because it's very complacent right now. There is no perceived risk that something can happen and that something can go, oh, I'm sorry, Brent, and that something can go wrong. Price matters a lot more than quality. And this is something that we've talked about before, but Howard Marks really went into this, into great detail. He says high quality assets aren't safe. They're not always safe just because they're high quality. And low quality assets aren't always risky. The key is the price that you pay for it. You can overpay for a low quality asset and overpay for a high quality asset, and your outcome is going to be exactly the same. But, this is just basically a regurgitation of Warren Buffett, which is the price you pay is the value you get, right? And this is just going to be something that becomes harder and harder for people to understand is that right now they're willing to pay, and we look at valuations in the markets, we look at price to sales ratios, et cetera. We are really willing to pay an egregious amount of money just to own assets. Now, we have to because, again, assets are rising, and so as investors, we have to do that. But we need to be aware that we are really overpaying for the assets that we're buying, whether they're high quality, low quality, or anywhere in between. You're overpaying for them. There's not cheap assets sitting out there right now. Because as we talked about last week, there's so much money chasing so few assets, everything is out of whack. And again, it doesn't matter what you own. It's overpriced relative to other aspects of the markets. So you're taking risk no matter what asset you own. Doesn't matter what asset you own right now. You've overpaid for it. And that's a problem with the markets. Not now, not tomorrow, not next week, not next month, maybe not even next year. But just understand that that risk dynamic is building up in your portfolio. So, I conclude with a statement that has really been the foundation of our risk management strategy with RIA advisors, really my whole life. This was something that was said back in the late 90s, and it just stuck with me, and it really became a foundation for managing portfolios in 1999, 2000, 2001, and so forth and so on. And it's really been kind of the backbone of our investment philosophy ever since then, which is, as he and we actually interviewed Robert Rubin on the radio way back then. And he says, as I think about over the years, I've been guided by 4 principles for decision making. First, the only certainty is there is no certainty. Secondly, every decision has a consequence, is a matter of weighing probabilities. Third, despite uncertainty, we must decide and we must act. And lastly, we have to judge our decisions not only on the results, but on how they were made. All that's on the website right now, realinvestmentadvice.com, along with our 15 rules for managing money. That's on there as well in this article, realinvestmentadvice.com. We'll be right back with John Penn right after the break.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA advisors' online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the insurance tab at realinvestmentadvice.com today. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
A new study has come out showing that people who take their coffee black are more likely to exhibit psychopathic traits, and people who order a quad shot, non-fat, vanilla soy, extra foam light whip with caramel drizzle are more likely to be their victims.
The Real Investment Show podcast.
I think it's all the same bag of coffee that they just put in different K-cups and labels because it all tastes the same.
Same show, your schedule.
And I think people that go, oh yeah, I can tell the difference between coffees, I think you're completely full of BS.
At realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, and the latest analysis from Lance Roberts and Michael Leibowitz. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
We were just talking on the break about I've got everybody fired up on X this morning. So if you want to go join the conversation, jump right in. The link is here. Let me see if I can bring this up for you real quick on the. Yeah, here it is. So Brent will bring this up. This was a new study out this morning showing the viewership of U.S. soccer lags behind other sports. Even on its most important day in 2023, Major League Soccer couldn't compete with NFL, NBA, or even other soccer leagues. And the white is the people that actually watch soccer. So my question on Twitter this morning is who here on Twitter or X watches adult kickball? And so people are... I set out this morning with a goal to offend as many people as I could on Twitter.
Stirring up the hornet's nest this morning with a stick and running away.
Exactly. Well, you know, there was another study out this morning. It was from the Pew Research Group, which said feeling second guessed was the name of this. And it said percentage of parents that say they are always or sometimes feeling judged by their partners or by their parents or by their parent, you know, their partner's parents, the parents in the community, or even their friends, right? Can you bring this up for me? And so you can look at this chart, and people are really worried about being judged by other people. And so my comment this morning is I turned 60, I've realized that there are huge benefits to growing older. That benefit is you completely run out of things to care about about what other people think. And again, just it's like my wife and I, you know, she'll look at me sometimes and like she's judging me and I'm just like, I don't care. And the same thing goes, if I judge my wife, she just looks at me, she goes, what? What? She did this yesterday, right? She actually came home for lunch, and so I was working. I was having lunch. She came home for lunch, and she hands me this letter from the Massachusetts Toll Road Authority, and it said that we owed them like $27 for tolls in Massachusetts. And I'm like, honey, did you travel to Massachusetts recently in September? She travels a lot, so it's possible that she was on a Massachusetts tollway and a rental car or whatever. And she said, no, I haven't been to Massachusetts. And so I look at her and I go, well, what do you want me to do about this? She goes, I want you to take care of it. And I'm like, how am I supposed to take care of this? It's in your name. And she goes, just take care of it. And she's judging me at this point. And I'm like, okay, fine, I'll do it. So I call, so she's in the kitchen with me, eating her lunch, and I call the Massachusetts Toll Road Authority, and they get on the line, and I say, okay, here's the case number. And they go, we need to speak to Mrs. Roberts.
Oh, hold on. Let me go get her for you real quick.
And she's sitting right there. And now I'm getting this ice cold stare, right? And I'm like, yes, here she is right here. So I slide the phone across the counter. She's got to answer all the questions because it's in her name. And like, I'm supposed to be able to take care of some random person calling in to take care of this. Anyway, the end of the story is that somehow they applied somebody else's license plate to her. I don't know how that occurred. So, but anyway, so $27 of fees avoided. Woohoo!
Hey,
everything counts these days.
it does count.
Yeah. So,
Look, as long as Shauna and I have been married, let's see, this year will be 27 years. Bless her heart. This is what she gets right here. So if she's judging what having him, like, I'm sorry, this is it. This is all you get right here after 27 years. Sorry, hon.
I know we're just both at that point. It's like, what's the alternative, right? You're not getting divorced at this point.
So it's
we're
like
both
she says,
too old to get divorced.
And we don't go out to eat a lot. During the week we don't go out to eat a lot. But she's like, hey, let's go grab a bite. I'm like, hey, well, where we're going? Can I wear flip flops and a t-shirt? Even if it's like suit coat and pants, like, can I just go in there with my flip flops, t-shirt? Can I go in there with my hat on backwards? Sorry, yeah, I do wear my hat backwards. I do that. Yeah, I am one of those.
I know.
Can I roll in there like that? She's like, yeah, you can probably get away with it. I'm like, I'm good with that.
Yep. No, it's very true. It's because even our dogs know that when my wife is putting on clothes and dressing up that she's going somewhere, so they want to go. If she's dressed like Adam Sandler, they don't care, right?
Hey, Happy Gilmore.
So look, we got a show to get to. Sorry,
this is fun.
I digressed. I digressed here. And by the way, the Christmas decorations are starting to arrive by Amazon.
Oh, so talk about decorations. Is your neighborhood? Is everybody decorating their house for Halloween right now?
Yeah, Halloween's it. My wife's already decorated the house for Halloween, right? So the house is decorated for Halloween, but now she's getting ready for Christmas because Christmas in the new house, right? This is the thing for her.
So everybody in our neighborhood's decorating their homes for Halloween. I am still yet to make it to that party, and Shauna just gives me the little subtle hints as we're driving down the street as we're running errands. Oh, look, so-and-so decorated their house. Oh, look, hey, well, I think they just put up their Halloween. I'm just driving there going, I got it. Okay. So guess what I'm doing this weekend?
Yep. Halloween decorations. Okay, anyway. Stuff to get to. Follow the money. According to a Wall Street Journal, Q3 saw the following money flows: $38 billion into U.S. stocks, $128 billion into bonds, $22 billion left the international markets. Where did it go to? It went into the U.S. stock markets. We've had massive inflows of foreign capital into the U.S. So again, this kind of goes back to a little bit of what we were talking about last week, is that, this idea of this everything market right now. Everything's going up. There's so much. I don't know where it's hard to fathom where all the money's coming from. It's just shifting from one asset class to another. But I mean, when you're talking about, basically $200 billion in a month flowing into markets, not surprised markets went up, but that's just a lot of money.
That's a lot of money. And so you are kind of in that everything market, except for maybe one area. And where folks are feeling the pinch are folks that have been sitting in their money markets, enjoying great yields, risk-free. And, with the recent Fed rate cut, rates are coming down. Now they're holding steady right now. I mean, money markets at the end of September, or 5%, a little bit north of 5%, but even, those have come down to the mid 4s, right? Now they are kind of holding steady right now in advance of maybe some additional Fed cuts here later this year. But I think, in this everything market, I think there's a big group of investors out there that are very frustrated that, hey, their yields, they're starting to see their yields erode in the safe haven, and now they've got to start looking for other areas where to go find yield or go find return. And in this everything market, even the more defensive positions or positions that are more yield oriented have had huge runs this year.
Mm-hmm. That's right.
So I think and so just seeing all of that money flow into bonds. That was a great article in the Wall Street Journal about money flows in the previous month, and seeing that huge inflow into bonds wasn't totally surprising to me, because with rates coming down, those are a lot of the conversations that I'm having with folks is, okay, John, hey, I'm seeing my yield come down in my money market here. What are some other things that I can explore to help protect some yield here? Right.
Well, and that's been one good thing about the sell-off in bonds here lately.
Yeah.
And again, we talked about the market being an everything market, right? Everything is overpriced. It doesn't matter what you own. Again, stocks, bonds, commodities, everything is overvalued. So you've got to be very careful about how you invest, but that doesn't mean things don't become opportunistic. And, recently, about 4 weeks ago, we were talking about the energy space and saying that energy was completely unloved. It had been declining for, 2 months. It had been under a lot of pressure. Oil prices were extremely oversold, and there was a trade setting up for energy, and that's worked out very well. So energy stocks have done very well since then. Bonds, conversely, as we talked about 4 or 5 weeks ago, were extremely overbought. You couldn't buy bonds. And now those have had a correction. So things will correct even within a stretched market environment, which is kind of what we're in. So there's some opportunistic opportunities to add risk assets to your portfolio, but you just got to be selective about how and where you do it.
Yeah, and in the previous segment, we were talking about focusing on risk and really having a good understanding of what risk really means when it comes to investing and deploying your money out there. Not investing is also a risk. And Lance mentioned earlier, I can't tell you still how many folks to this day that I visit with that, back in the great financial crisis during 2007, 2008, I mean, the pain was just so much that they sold out, and they've been in cash ever since, just waiting for the right opportunity to get invested. And now fast forward, it's 2024, and it's there's always a reason, at least I find, with folks that have been waiting, let's say since 2008, they got out, they never got back in. There's always a reason not to invest. Well, hey, John, we got the presidential election coming up here around the corner. I'm going to wait. Well, then we're getting into 2025. Hey, we may be getting into a full-on recession next year. I'm not sure. Will the Fed be able to navigate a soft landing? So I'm going to wait. Or we got this. Or, hey, what if this happens? Or what if this happens? What if this happens? There's always going to be a what if. Right. There will always be a what if. And, sometimes as investors and just as people, we're wired this way. Look, I get it. It's emotional, especially dealing with money, and you're out there working hard for it, and you're saving it, and I will tell you, there's a very common theme with the individuals and families that we serve here at the firm. None of this has been handed to you. You are out there working hard and saving money, so I get it. But, don't let the worry about, hey, this might happen, that this potential event could happen. Don't allow that to derail you from trying to set yourself up better for the future.
That's right. All right, we'll come back from the break. We're going to talk about stupid questions and why you shouldn't treat your advisor like a mutual fund. Don't go away.
Daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Medicare open enrollment starts October 15th. If you need Medicare insurance coverage, RIA advisors can help. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in lost benefits and penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that's right for your lifestyle and budget. Click on the Insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So, apparently, the James Webb telescope have you heard this story yet?
Not yet.
Sent this to my wife yesterday.
Okay.
On TikTok because we're ready. We have been ready for a while, but we're ready now for sure. But the James Webb telescope had been tracking this, what they thought was a meteor, and apparently it's self-corrected its course and is now approaching Earth at near light speed. So they are now pretty sure that aliens are coming to the planet, which is not a threat because when they get here, they'll realize there's absolutely no intelligence. When they go, take me to your leader, there's no intelligent life here on the planet. So they'll just go back home. But apparently, aliens are on the way. So
is it the Autobots?
I don't know. But apparently they're on the way and should be here sometime by the end of the year. So we'll see.
Well, maybe they'll stay for a few minutes, or they get here and they land and they go, "Oh, we landed in the wrong spot. See y'all later." Yeah.
Yeah. I just want them to say, "Take me to your leader," and they take him to Joe Biden. Yeah. See ya. We're safe. We're all safe. Anyway. So a couple of things just to kind of wrap up. As I said, there are no stupid questions. And again, we get a lot of questions every day in chat and by emails and phone calls and everything else. And, if you don't, and here's the differentiator between a question that is stupid and a question that is not. A stupid question is one you know the answer to, and you just ask it anyway. If you don't know the answer, and honestly you don't know the answer, then it's not a stupid question, right? Because you're trying to figure out something. And so a lot of people won't ask questions about their portfolio because they're afraid that somebody will think they're stupid, right? Or whatever the issue is. And that's not the case. If you're managing your money, ask questions. That's how you learn. We talked a little bit about technical analysis yesterday. I got a bunch of emails following that discussion, asking more about technical analysis. That's great, right? I'm glad you want to learn. That's the whole purpose of this show every day, is to answer questions for you that you don't know. And a gentleman that works with my wife upstairs, he said, I listened to your husband's show the other day. He says, I have no idea what he said. And that's okay, right? If you keep listening to the show, you'll learn, right? You kind of learn through this show through osmosis as you're just driving to work and the day and sitting in your car driving. A lot of this stuff you may not understand right now, but in 6 months, you're going to go, oh yeah, I get that, right? It makes complete sense. We have to learn. And the only way we learn is by listening and learning and watching and doing and those type of things. And so there's never a stupid question, right? Unless you already know the answer. But, the important thing, John, is that we need to challenge our own views as well.
Agree.
Yeah.
Well, and I think a lot of this just comes down to, understanding what you own and why do you own it? As far as, how do you have your money invested out there for your future success, right? And how would these investments behave, if we do get into more volatile times, or, it all goes back to the management of risk. How are you managing the risk in your portfolio? And a lot of that really stems from what do you own? And, do you understand what you own? And if you don't, and if these, if investments are being recommended to you, or if they are being managed for you by an advisor, and if you're not clear on what the strategy is, or if you're not clear on why they own what they own, hey, at the end of the day, it's your money. So you have the right to ask those questions to get a better understanding of why is your portfolio designed the way it is. So, I mean, just last week, I had a great conversation with a couple where, they're kind of out there maybe searching for a different financial firm to work with. And I was able to visit with them. And, the current advisor that they're working with is using a portfolio of, it's an all mutual fund portfolio. Not knocking that, not saying that mutual funds are bad. That's just how the portfolio is structured. And we started diving into this, and I said, well, let's take a look at these. I said, do you understand what these funds own? And I kind of got the blank stare. I said, well, let's dive into this. Let's take a look at what these funds own. How are they positioned? What are the underlying securities in here? And oh, by the way, did your current advisor ever explain to you that, hey, there are some internal operating expenses associated with these? Let's take a look at this. And again, not talking bad about mutual funds or any type of fund type of investment. Let's just get in there and take a look, and let's take a look at how these are working and how they're built. And as we were going through this conversation, I could tell that, this was information that it had never been explained to them before. And I just asked them, I said, has your current advisor taken the time to get in here, to get into the weeds, to really explain how these investments work, what do they own, and how you're positioned? And they said, no. We just kind of took their advice as they kind of know what they're doing, but they had some concerns about how their portfolio was built. And once we got in there and got our hands dirty about what they really own and what their underlying securities were, they just said, this is the first time we've had a real good understanding about what we own, right? And so you got to take that time and ask those questions, because I think sometimes folks feel like, well, if I ask this question, I'm not going to, if I make myself look like I don't understand what I'm talking about here, then I look inferior or I feel inferior. That is not the case. If you don't understand what you're invested in, you have every right to ask. And if you don't get a clear answer, or if you don't understand the answer, guess what? You ask again. It's that simple, right?
That's right. Well, and again, this is, the challenge of investing. The other issue that you have to be open to is that when you ask the question, you have to be willing to accept an answer that doesn't agree with your view.
Correct. Yeah.
Right? And then evaluate that for its merit. And then you have to make your own decision from there. But if you're asking a question, you're engaging in an information gathering act, and you can't ask the question and then just completely disregard the information, right?
Yeah. Something else too I see a lot of, especially when when we're working or assisting couples. Usually there's one spouse or there's one person in the relationship that likes to get into the weeds a little bit more into the portfolio and the investment management side of things than the other. And sometimes the other spouse or the other person says, hey, you know what, this isn't my wheelhouse. I don't even know what to ask. So I'm really not interested in this. Okay, well, you know what, just join the meetings as we move forward. Just hey, I just want you here. Mm-hmm. So you can get to know me better. Heaven forbid if something happens to your significant other, you know who to reach out to and call, right? But as we move forward, even if you don't understand 100% of everything, like Lance mentioned earlier, just the more you're around it, the more it soaks in where you go, oh, that's how a bond works. oh, here's why we own long duration bonds in the portfolio. Oh, here's why we own X, Y, or Z. This is how it's all coming together, just so that at the end of the day, you have a better understanding of where your money is and what it's designed to do. I mean, I can't tell you how many clients that we work with, the profession that they're in, it's not my wheelhouse. I don't know the first thing about flying a plane or engineering a locomotive or, being an electrical engineer. I don't know anything about that. But if, I'm interested in learning about it, that doesn't mean I'm going to go rewire my house. But the more you can teach me about it, the more I want to understand. So your advisor, when you're working with an advisor, when you're working with a fiduciary, they should be a coach. They should want to educate you and kind of help you through the process. And if you're asking your advisor questions, and if you feel like you are being talked down to or that you are being belittled, for lack of better words, chances are you got to go find somebody else to work with, right? Because I hear that a lot from folks. They're like, John, every time I ask my advisor a question, they make me feel like I'm an idiot, or they don't welcome questions from me. I'm like, well, why are you working with them in that case? Just putting that out there. Sorry.
No, it's very true.
Yeah.
But that's also goes to just kind of one other thing real quick, which is, don't treat your advisor like a mutual fund, right? And we see this a lot, and people get their feelings hurt when we won't take them on as a client, because they're just like, hey, I want to give you a little bit of money to see how you do. We're not portfolio managers in terms of like an ETF or like a mutual fund where we're managing wealth to meet financial goals. So, when you work with a financial advisor, select one. The worst thing you can do is have multiple financial advisors that are all working against each other. It may sound great in theory, like, oh, I'm diversifying. No, you diversify your portfolio by diversifying your assets, not diversifying your advisors. Once you start doing that, you start creating a lot of overlap risk, and you create a whole lot of other risk in your portfolio that you don't even realize, concentration risk, et cetera, that will wind up hurting you, and plus it dilutes your performance over time. So, select your advisor, somebody, whoever it is, that you agree with, that you understand, that understands you, understands your needs, has done all the background work, et cetera, and then work with them very closely to build your portfolio and to grow your wealth.
Yeah, so if you're going to Lance's point, if you're going to go out there and manage your advisors like they're a portfolio of mutual funds, then do all the advisors a favor out there. Just go buy some mutual funds, right? Because if you're kind of putting it, because in any given year, one advisory firm, from a portfolio performance standpoint, one advisory firm will be up more or down less. Returns are going to vary from one year to the next, from one advisor to the other. I think what's even more important from a match or a fit is the philosophy. Does your investment philosophy, does your philosophy around managing risk, financial planning, does that sync up with the advisor that you're working with, and let that be the driver of your relationship?
Yep.
Yep.
By the way, I said the other day that I didn't realize that Jimmy Carter was still alive, right? He's 100.
He's 100.
Yeah, no, it's amazing. My wife was watching the new Golden Bachelorette, right? And so they went to Vegas with one of her dates. Wayne Newton showed up in their suite. That dude, I did not even realize that Wayne Newton was still alive.
Fountain of youth?
I don't know. It's really artificial teeth and a lot of plastic surgery, but that guy's still hanging in there. So he may outlive Jimmy Carter at this rate. All right, wraps up the show. Get by the website. Our latest article on risk management on the website now. So go take a look at that. Our 15 rules for managing risk there. And send us any questions, comments, and emails you have. realinvestmentadvice.com. See you tomorrow.